region around the Great Lakes has been called the heartland. When it comes to agriculture, there's hardly an area in the world that compares.
Everybody, just hold on. I don't know what we're going to have here.
There's a lot of self-proclaimed geniuses out there that know the national yield, but they're all wrong.
Manage money, piling in.
Double digits higher.
So at this point, we're in kind of uncharted territory.
There's a lot of money on the sidelines.
So that was a crazy one.
That's what brings the viewers back. That a boy.
Good morning, everybody. It's Tuesday, November 4th, and this is the AgYield War Room. Dan Dempsey, and I'll be moderating today's session. As always, if you get any questions or comments, please feel free to drop us a line in the chat area. We'll be sure to get to it during the show. Overnight markets here, December corn down 4 1/4 at 4.30. January soybeans were down 17 1/4 at 11.17. And December Chicago wheat was up 3 at 5.46 1/2. No export sales announcements here this morning. Government's still shut down. What we know, got an election day here, off-year elections. New York and New Jersey certainly the highlight. So we're gonna have to see what happens out there. But I know those are hotly contested and very polarizing elections that are going on. So we'll see what shakes out there. StoneX yesterday after the close slightly increased their corn yield. They're at 186. And on the soybean side, they just marginally reduced it to 53.6 on the soybean side. With that, we were talking before the show. Certainly the last couple of days, soybean options, just options in general, just been whipsawing around, kind of crazy. Justin, maybe a few thoughts there, and then I guess other things that may be on your mind here this morning as we start the day.
Yeah, well, I mean, you look at, beans have had an extreme run up here. I mean, basically $1.15 in a little less than 3 weeks. So you're going to have some setbacks. I mean, we're broke out of some big ranges. It got a lot of, I think, new buying, short covering, all the above in there. A lot of excitement, I think, in general. We still have to get a deal signed with China to see how that's all going to work. Now that we've had a big flat price move, you've seen, Brazilian basis levels kind of fall dramatically to try to stay competitive. You're getting stories every day of, China buying a bunch of cargoes out of Brazil, and then maybe they didn't, so it's really tough to know what's being done, especially with a shutdown. So I think we're all kind of waiting to see, get an actual deal signed and get some more details. I mean, obviously we've gotten guidance from the White House, as we talked about yesterday, about 12 million tons of beans that has to be bought by the end of this calendar year, which I think is friendly. You got to see that actually happen. So questions like, is this going to be state buyers, like Sino Grain, et cetera, that are kind of directed by, China to buy, and then the, independent buyers, if that's such a thing in China, still just buy whatever's the cheapest. That's the big question, is like, how's this artificially going to be done? Are they going to be buying beans at $1 or $2 over the rest of the world if it came to that, to get the number? As we talked about, it could be totally uneconomical, and it's a relatively low dollar amount for them. So you can't rule that out. And that's, super friendly in the short run, but as we talked about lots of times on the show, ultimately other buyers switch to other destinations, and it's just hard you start losing non-China business. And at the end of the day, if the supply, if there's too much supply in the world, it's hard to artificially create a long-standing bull market. If it's extra demand, which I'm not on that page, then you can really start something here. So yeah, still lots of questions out there. We've had great run-ups. I think I'm still sticking to what we've been talking about, which is, when you're at 15-month highs, you have to find some way to put a good price floor in, especially now that your yields, and hopefully it continues to get more friendly and we have a bigger run-up in prices, so you have some still keep a lot of upside. But you hate to have this come through and then the deal wasn't quite as we thought, and we break back down and you never took the chance to do something. So
yeah. Ted Cruz out this morning says end of the week, first part of next week, we get this government back open. So hopefully that's right. We'd love to see a huge data dump and get back into at least a normal cycle, you know?
Yeah, we have, I mean, either way, we're going to have a report on the 14th, right? So that's next week.
Mhm. Yep.
So what's going to be interesting, as we talk about, vol has still stayed cheap, even though we've had these big moves. Meaning that these short-term options are moving dramatically without as much risk as futures, but they're moving, 70% as much as futures. So it's a much better way to put on, in my opinion, hedges or trades or whatever. So we're going to be going to the December 14th report. You're going to have December options with only, a little over a week left. So they'll be relatively cheap for such a big report. I think there's going to be, I guess we'll have a lot of interest in doing those kinds of things next week before or around the reports. Let's look at the range of guesses. I mean, that are going to be going into this.
Oh, that's crazy. I mean, you could have a 6 bushel high-low estimate on corn.
I bet it's 10.
10? Yeah.
It could be. I mean, now a lot of these guys just come out and try to, they don't want to, step too far off base. But realistically, I think the market's got a 10 bushel range on corn yields probably. Which, it's pretty dramatic for November. So
yeah, and not having any data for 35 days. I mean, over a month of no data,
Yeah, and corn's obviously one to talk about a lot, but beans, are going to be sensitive to, I mean, if you think about, just being within 3-4% of the government number, one extreme or the other, it's a big difference, especially with all the stuff unknowns on China and what that looks like. So, if everything was taken at face value and, they do indeed buy 12 million tons by the end of the year, by another 25 million tons by the calendar 2026, and you were to see a bushel and a half, let's say, come off the yield, I mean, you'll go into rationing mode. If they raise the bean yield and it's, the deal's not quite as good as we thought, like you could argue probably close to a 500 carryout. So I still think there's a wide range of what could happen here between now and the end of the year.
Dustin, what's on your mind this morning?
Yeah, I mean, there's not much to know right now. Justin said it all pretty well. I think my personal opinion is that we've been kind of lulled to sleep on risk here. And there is no Chinese corn deal, right? And the corn exports, the river is going to compete with beans. If we're going to try to ship all these beans, if we are going to see a state-sponsored buyer of beans, I personally think that the Safrinha crop that we still are going to compete with for corn, I think there's maybe a lot more corn risk, in my personal opinion, than people want to think, especially on the spreads. Maybe flat price rises, kind of getting some strength from beans. But I think as we get to the real test will be what first notice day brings. And so you just think about all those bushels that are coming to market that are not priced yet. It's a December contractual problem potentially setting up. I could be very wrong on this, but the last number of first notice days in recent history, I think kind of have supported this idea that there's still a large kicking of the can down the road happening, and it's in the form of basis only. And you think buyers have already kind of come for the buy side. There's a clock ticking for the sell side, which is expiration day, first notice day. So we'll see, but it's November 4th. We'll see in 25 days what that looks like.
Well, it's interesting too. We've seen the dollar starting to creep back up into that kind of 100 range as well, kind of quietly creeping up.
Yep. Dollar going up. The real still hanging in the 1846 for December, but it's down 9 today. So anything close to 19 on the real, I think supports wider spreads and higher flat price. If for some reason we were to have what happened last year, which is just weakness right into the very end of the year for the real, that would be probably more negative flat price and more narrowing of spreads, in my opinion.
Yeah, I think as far as corn's concerned, we are still shipping a lot. We have a big a big book on. We've had extremely good demand up to this point. I think the question now is, just to add to what you're saying, and it's kind of my concern too, is if you take the 12 million ton at face value and you say, okay, this is a deal, they're going to force this business, and then you just shift away, you do exactly the opposite of what we've been doing in South America for months, which is China buying, basically being instructed to buy all, South American beans, right? So they just kept shipping and shipping and shipping beans and holding back corn. And what if you flip that script here for the next few months or 6 months even? Because we know they have the corn. So even though we do have a massive book on, which is great, and I think that's, hopefully that continues, but you could see that kind of switch.
Yeah, and I guess what do you think, Justin? Like the WASDE report comes out, not even maybe this report, but the January report. Like, what if they have a 182 yield? Like, a lot of people, say, well, that's not the 188 they were talking in August, or the 186 they're talking in September. But like, it's still a record yield by hundreds and hundreds of millions of bushels. So like, what happens when like our gut slot's kind of over, and it's back to Safrinha crop being shipped?
Right. Yeah, I know it's it's all relative to where you're coming from. So, a lot of people were mad about the 180 yield to start the year. Right. So if you would have said it was 182 back in the summer when we were at these prices, you'd have been bearish. And then we added a bunch of acres. Right. So it's just kind of like when you compare it to 188, you're like, it's much better. Right. But then you compare it to where we were even in the spring. In the supply. Now the demand, to be fair, has been extremely good. So I think that's helped a lot. But we found stocks at the end of the year, which is what how bad the spreads acted when we were at the tightest point of the year. And now we're going to have, the most abundant time of the year, and the spreads have narrowed a bunch. Part of that's, I think, to your point, I think farmers locking away as much as they could, kind of wanting to wait to see how these things play out. And the price just got, too cheap. Spreads got wide, so it's incentivized everybody to lock up bushels. But now I think we're going to ask ourselves, now what? Because at the end of the day, people are doing basis contracts, anything they can to free up some cash, pay bills, try to wait this out to hopefully get some more friendly news. But to your point, it is a ticking clock. Like, there are a lot of loans that have to be satisfied. There are a lot of costs. So it's something to keep in mind with when you're going to have to, move bushels to pay bills and all those kinds of things. Because we've gotten some great basis pushes. It's worked for guys that have stored it, especially on farm. We've gotten some, big appreciation in both spreads and basis. So I think it's really important to manage those cash flow needs as well, and not wait till you have to, because that's what we typically see is everybody kind of needs at the same time, rent checks, prepays, whole bunch of different things. And so when they get down to where they have to either roll or price basis only contracts, right, it all comes at the same time. And that's why you see this. It's not a coincidence. That's why that whole mechanism works that way.
Right. Yeah. I'm looking at like the balance sheet right now, and you're talking 16.055 billion bushels of total demand to get to a 2.1 billion carryout. Like, we really need yields to come down. This is like it's a very, very lofty demand estimate in my opinion. Like, yes, demand's good, but like it kind of needs to be with what we're currently looking at right now. So like to say that like, oh well, we're gonna go knock off 300 million bushels of production, so carryout's got to go down to 1.8. I would argue that that's a really hard. Look at the feed demand number, right? Like, feed demand 6.1 from last year, 5.675. Right, and our fourth quarter usage suggested feed demand was down in the stocks numbers. That's why we had a surprise stocks build. Export demand 2.975. We're talking record demand by a long shot just to get to a 2.1 carryout. So I think that's the one thing I don't necessarily understand when I hear a lot of analysts out there. They talk about like how bullish things could get. It's like, well, we've never dealt with this many bushels before. We have to kind of keep to the current pace and almost extend it unless we see a bigger drawdown on yield, in my opinion.
Yeah, I mean, you're going to see, right? If you get a drawdown on yield, you're going to get a drawdown on feed and residual.
Yeah.
For the first, call it 300 million bushels, in my opinion. And then exports, I think it's too early to say that you can't hit that number because we're certainly off to the start you could.
Yeah.
But you have to assume that Brazil's not going to take over in a major way on the export market, which I think is a tough assumption. So, I mean, we nailed it, our gut slot, right? We did huge business. But now what? I think that's the question.
Yeah,
we are in the pace. It's just that those seasonals really have changed with Brazil becoming such a big player.
Right. And
we don't
have to compete with beans, right? Like you said it perfectly. We nailed it. We had no beans going down the river during that time frame either.
Yep. Now Ukraine's gotten, not reliable on the export market, so they've gotten super uncompetitive. So that's helping us right now too. But that's the big question mark is Brazil.
Very good. Ryland, real quick here. Feels like we're higher cash is driving us a little bit in cattle, and hogs appear to be disappointed that that tariff was only reduced by about 10%. I think they were looking for a bigger help on the tariff side there. So I guess what are your thoughts here this morning?
Yeah, so caught a little bit of a rebound yesterday, and yeah, like you said, the auction markets and the OKC felt like that was kind of a driving force in the feeder market. So I think you got just a general kind of cautious, optimistic sense of cash this week, especially just because of the price action on the board here. And you've seen a little bit of an uptick in box beef again. Choices up 112, select up 128. So it does kind of feel like there's an element of support here, but overall, it just seems like everybody's still waiting for a bad headline. So it feels like we're just starting to consolidate a little bit down here. So not really sure what the next move is going to be. I think you've baked in a lot of kind of negative news into the futures, and it's just a matter of kind of leveling off here and just seeing what comes next. And on the hog side of things, yeah, maybe the market was a little bit disappointed by some of the talks with China. It just seems like we've been in this downward swing, and at this point, we really need to see, just like we've been saying, some movement in cash. And I think you had a little bit of support early just because cash was up very slightly yesterday, but overall, carcass down, bellies down. There just doesn't seem to be any really good news to kind of latch onto. Plus, you had these hogs actually trading down sub 80 at one point. So we're pretty heavily oversold technically. It just feels like we're still seeing more liquidation down here. Open interest is down almost 3,000 contracts again here. So waiting for some good news, just cannot really find too much of that. Like I said, it feels like cash may have to try to save the day here, but we've already got a pretty big discount priced into the December board. Market doesn't believe that's going to happen.
Very good. Appreciate the update there, Rye. Just came into the open. We'll get a quick readout. December corn down 3 3/4, now at 430.5. January soybeans are down 17 at 11.17 is the last there. And December Chicago wheat is up 3 1/4, 546 3/4. We appreciate everybody that tunes in on a daily basis. If you wouldn't mind, throw us a like and certainly subscribe. Doesn't cost you anything to do so. It'll keep you up to speed on everything that's going on with AgYield. So again, thanks to everybody that supports the show. We're doing this live every day that the markets are open on X, Facebook Live, and YouTube Live at 8:15 Central Time. Appreciate the thoughts and comments here this morning, guys. It was a good show. Hope everybody has a great day, and we look forward to talking to you again tomorrow.
The War Room is proudly presented by AgYield. For over 50 years, the AgYield team has provided grain marketing and risk management solutions for growers across the country. Our veteran consultants harness cutting-edge technologies to pinpoint risk, optimize market performance, and protect your farm's profitability. Discover a new approach to farm revenue management at AgYield.com.
Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.